Hey folks, today we'll be presenting PeerShield, your reliable P2P coverage provider on Cosmos, which we built during the Delphi Labs Cosmos Hackathon. So just to give you all a background, the DeFi industry has seen a lot of growth since the summer of 2020, but that has also brought an increased risk, as evidenced by the 6.5 billion worth exploits that have happened in DeFi. As for traditional markets, insurance has proven to be a reliable solution to reduce such risks. But in DeFi, there's just less than 1% of total TVL which has actually been insured. So if today the total TVL is around $48 billion, uh, only $400 million worth assets have actually been insured, which is providing us a very big opportunity in this segment of the industry to get into. So, to talk about what the product is, PeerShield is a peer-to-peer risk management marketplace for digital assets, which enables users to share risks with each other. So either you can purchase cover products that protect against different kinds of risk like impermanent loss, tax exploits, etc. Or you can provide liquidity to capital pools that covers the risk to earn yield on these assets. Why Cosmos? So Cosmos has seen a rapid growth since IBC introduced in 2021, but the risks have also increased, especially with the exploits of Osmosis and Terra very recently in 2021 and 2022. More than 10% of the liquidity is comprised of bridged assets, which comes with its own complexity, leading to exploits. And there's a lack of concrete risk management protocol on Cosmos um, as compared to other major chains like Ethereum, of course, with more insurance products being present. And now, why did we choose Osmosis for PeerSheet? Because liquidity and demand is a very big factor for such coverage products. And Osmosis, being the liquidity hub on Cosmos, just provides that. And there's a great community as well as developer tooling support, which helps build such products at a fast pace with a stable and uh, great scalable future. And Osmosis has one of the best risk mitigation practices with its rate limiting feature standing out in the crowd of other chains at the moment. So, here is the overall architecture and mechanism. Just to take you through the major ones. We have a DAO mechanism. I won't be detailing much on it as we have mentioned and detailed everything in the document, which I'll be referring to in a few minutes. So we have a risk assessor, we have claim assessment, we have, of course, the liquidity providers, which is the coverage provider, the insurers, and then there are the insurees who provide and put money into the LP pools. Um, the to start with, I'll show you how the protocol overview works. It starts with the risk assessor, who underwrites new pools and locks a certain tokens for 14 days, which is the standard epoch time, which is the osmosis bonding period. Uh, so once they underwrite a new pool and lock certain amount of tokens, the pool gets activated, post which coverage providers lock assets in a capital pool once this threshold limit is reached from the risk assessment part. Then protocol issues coverage proportional to assets in the capital. Coverage buyers purchase coverage for LP positions. Now users can deposit assets and interact with Osmosis DEX to LP assets by and pay premiums by coverage on PeerShield itself. So there won't be any um, outright premium payment, helping us attract more users. So LP rewards pay a percentage of premiums, helping improve the UX. Uh, Assets in capital pool can earn additional yield because we will be utilizing something like a Quasar, and these yields will be paid to the coverage providers. The coverage providers will also be paid a certain amount of the premiums that we earn from the insurees. And lastly, claim assessment happens to DAO token holders who can approve or deny claims. The DAO council will determine payout if the quorum is not met, which again is detailed in the doc. And assets on platform will be locked for 14 days, similar to Osmosis. So here are the stakeholders involved, which is the PeerShield DAO, the coverage provider, of course, the coverage buyer. So here it starts with the risk assessment and then goes to the coverage provider, the coverage buyer. The DAO token holders are integral part of all this. Then we have the core contributors, and of course the DeFi protocols which are coming on board to get insured, and the LP pools that we are also creating. Now, the insurer flow is something like this, where post risk assessment is done and a pool is activated. A coverage provider can deposit assets which goes into the capital pool, which in turn is deposited into Quasar, where we earn more yields and that is returned back to the coverage provider. This helps us for a sustainable future on the product as well. And the coverage provider, earn a certain percentage of premiums and also the yield generated from Quasar. As for the insuree, they deposit assets on the Osmo pool on the product, and they receive a certain reward, which is directly on the liquidity pool itself, post a certain deduction of the premium that is being paid. Um, now, that is the major interaction of insuree. Just on the claims assessment part, if a claim is made and that is approved, the capital pool pays out back to the insuree, and this is done after the quorum is met on the claims assessment. So yeah, this is the basic product. Here is our team, which is Abhitej, Hemant, and me, Rishabh. Here is the doc which we have linked to in the submission as well, which you can go through, where we have detailed on all the flows and all the major details. We have also created a sample POC, which we'll just be demonstrating right now.
So hey guys, so you can clone a contract in the given GitHub repository that we submitted. Once you do that, you just need to run the specific command of Cosmwasm, which will create the contract wasm file. Once that is done, you have to deploy it on the Osmosis blockchain. So we'll do that quickly, and once that is done, it will generate a JSON dump. So we'll quickly copy this JSON dump, Control C, and we go to a JSON beautifier online, and we'll paste it over here, which will give us a transaction hash. So once we have the transaction hash, we'll go to select on Blockchain Explorer, paste the hash, and we will see that our Watson code has been uploaded and stored as 7063. So we'll quickly instantiate the code. So click on instantiate, connect to wallet. I'm going to call it PeerShield v0.0.7. I'll be the admin. You can instantiate the message as null, but you will also have to send one Osmo as an instantiation. This is the risk assessment tool, right? So you click on instantiate, and yeah, we will get a transaction. And once a transaction happens, it says my instantiate is complete. Now, if I go view my contact, you can see my contract has already one Osmo, and I have a list of queries and a uh, list of executions. So if I see if there are any insurance available, currently no. And if there are any claims available, currently no. So step one of is that we need to provide coverage, right? So you click on provide coverage, you attach some funds, like in this case, I'm going to attach 3 Osmo, right? So once I do that, I can execute the transaction. So the transaction execution happens, and once the transaction execution happens, if we go back and if we query the coverage pool, I want to see how much Osmo is in my coverage pool. You can see that there is 3 Osmo in my coverage pool at the moment. So once our coverage pool is bootstrapped, we can go ahead and create insurance To create insurance, we give a human readable ID. I'm just going to call it ins1. We have to provide the recipient address of the person of whom the funds should go. So in this case, I am just going to use the same wallet address, and we provide a title for this insurance. So I'm just going to provide it PeerShield insurance, and we provide a short description. This is a cycle insurance. So once this is done, we must be able to select some Osmo. In this case, I will select 3 Osmo, and we should be able to execute it. So once that is done, you will approve the transaction. And once this transaction is broadcasted, we will see if we go to the list insurance, now we'll see there's INS1. So just click on details. To view more details, you just provide the human readable ID. So once you query, we can see that the data of the given insurance is created, right? So now let's say whatever reason the assets got hacked, right? So the insured is submitting a claim for the insurance. So they just have to go for claim, and they have to provide the ID of the insurance. So once that is done, we will execute, right? And we'll approve this. And once this transaction happens, we can see that we also have a query named list claims. So we can see who all have applied for claims. So we can see INS1 insurance has applied for a claim. So once the claim assessor assess, they are going to approve the claim. So once the claim is approved, right now it is a 1:1 ratio. So 3 Osmo should go out of the coverage pool that had been provided to the user recipient. So I'm just going to type 1 and approve the claim. So once that is done, uh, yep. So once that is done, now what we can see is first we will see if there are any insurance. So the insurance has been removed. We'll also see our coverage pool. Now you can see our coverage pool has been completely drained out, right? So even just to prove, even if I try to create a new insurance, uh, ID I1, title I, and description hello, and receipt we don't need recipient in this case. So even if this is a valid JSON file, and I add like 2 Osmo of asset. So as it says, the coverage pool does not have enough funds to cover, so I am unable to create my insurance. So we have basically completed the basic flow, the POC flow of the maker ticket system, especially focused towards the coverage pool. And yeah, for any doubts, please feel free to open an issue at our GitHub repo. Thank you.